Okay, are we ready to go?
Yes.
Perfect. Okay, thank you very much for having me here today. My name is Sara Simeone and I'm the CEO and co-founder of Digital Oracles. So it will be a very informal presentation and I want this to actually be very conversational because we actually just finished our pre-seed round and I think we're quite fresh from all of this, and I think, perhaps we can just transform it into a conversation, okay? And some of this stuff perhaps is a little bit basic, but it is needed. So let's cover the basics and then let's go a little bit more in depth. So this is a little bit about me. If I was an NFT, since we are actually a blockchain company, I could probably tell you that my background is in data strategies, go-to-market strategies. I mentor some of the most exciting startups across Europe, so from Crypto Valley to Hatch Enterprise, Accelerate Me. This is not the first time I've been here. And I work for some of the world's biggest media agencies, which is an amazing experience. Of course, the past 2 years have been a bit of a journey, to say the least, because building Digital Oracles has been a little bit of a roller coaster. And I tell you that if I had £1 for every pitch presentation, failed application, investor inquiry, and no that I received, I'd probably be rich by now. Or at least back then we could have pre-filled or filled part of our pre-seed round. And I'm not alone. We are not alone. There are millions of entrepreneurs out there in our same situation. And that is why, we want to change that, and we think that we can easily change that. And this is why we created Digital Oracles. It's a grow-to-earn platform that tokenizes and monetizes startups' growth progress. So how are we doing that? We're basically monetizing the growth progress of startups, turning all the meetings, no's, work that you do into liquid and tradable assets in the form of NFTs, non-fungible tokens. We leverage the crypto community that will give the liquidity to startups and signals to the investors. And finally, we remunerate all those involved, including, through royalties, rewards, as part of this new growth economy. So our USP, you are talking to a lot of investors, brokers, advisors, and they're all in the business of monetizing investments, monetizing exit. So they charge success fees, subscription fees in some cases, equity, whereas we have found and developed a method to actually monetize growth. So this is the investment ecosystem as you know it. So there are the investors at the top, very few. Depending on the growth stage, you may want to go to an accelerator like this or an incubator, business angel networks, VCs, family offices, you name it. We're talking about equity. Then there is you. Your job is to turn an idea into a profitable business. And finally, we got your customers. And that is quite important because, you need to find a product market fit. And, they help you to actually validate your growth. And sometimes we think that the money only comes from this area. But sometimes the money can come from this area because very few people and very few entrepreneurs are actually thinking of, leveraging verticals in order to actually their own verticals and the key, stakeholders in their own verticals to fundraise and to fund their projects. So at this point, I would like to ask you actually, if you could tell me a little bit more about your projects in terms of verticals that you are working in. So, for instance, Phil.
Verticals. So currently engaging with the angel and trying to learn about them.
What about your company? In which vertical?
Low calorie alcoholic beverages.
No calorie alcoholic beverages. Good. Yeah, low calorie.
Dried flowers.
Dried flowers.
Yeah. Symptom monitoring through an app.
Symptom monitoring to an app. Okay, so medtech. Yeah.
Pain relief.
Medtech as well. Pain relief as pills and things, or more.
A wearable device.
Wearable.
An implantable device.
Interesting.
Mycology education and accelerator.
Okay, mycology accelerator. Interesting.
Yeah.
I don't.
No.
So
fire extinguishing drones, hologram drones.
Oh, interesting.
I was part of the team.
You're part of the team or part of the team behind? Okay. So have you thought about, like, developing a supply chain of, your projects? Like, who is actually, your key customers? I'm sure you've done the business model canvas, right? So in the part of partners, so have you identified already some key partners that could potentially propel the growth of your company? So your project could test or beta test some of your projects, products or services. Have you thought about reaching out to them to actually sell them a POC? Because perhaps that could be an easier way in some cases to develop a POC for them and raise funding to actually develop the product that you could sell in the future to their competitors, a little bit tweaked. So that is the kind of fundraising that I'm talking about down here. So we always think about them as our customers, but actually they could be much more than that. So let's deep dive a little bit more than in what these, investors do. So accelerators, incubators, you are in one. Help promising startups, companies develop as a business. They work with cohorts of startups and deliver programs to help growth. At the end of the program, they may or may not provide investments. So with the team at Digital Oracles, we created a white paper. We actually listed over 166 accelerators based in the UK. And I would probably say 80% of those offered some sort of investment in exchange for equity. Others charge fees. And this is not your first nor your last accelerator that you will do in the course of your initial stages of development, because at the end of the day, you will realize that by looking around, depending on your vertical, there may be some, very specific medtech, for instance, accelerators that may be able to provide you with the specific, proof of concept that you need in order to bootstrap that growth. So when we go then to the business angel network, so there are business angel networks are interesting breed of investors, because they are basically a group of high net worth individuals keen to invest in startups. But most of the angels that are part of these business angel networks are passive investors, meaning that, to you is probably not very relevant. It's not going to make a big impact on your business. And at the beginning of your journey, you may want an investor, may or may not, but in our case, we may want to have an investor that is actually a little bit more active, because they could open up doors. So look at business angel investment as a way to open up doors to specific channels that are important to you. Of course, they review vetted deal flow of opportunities, and this is a bit of a blessing and a curse, because unfortunately in a lot of business angel networks, you will find a lot of gatekeepers. And unless you've been referred to some of these business angel networks, all you're doing is to basically fill in applications to then, have the luck to actually be selected by their investment manager, and then you're just going to go and entertain dozens of calls and much more. And of course, they invest small tickets into their favorite projects, and this again could be a good thing and a bad thing, because the most important thing for you at the beginning of your fundraising process is to actually have a clean cap table, capitalization table. If an investor sees that, at a seed round, you have 100 investors in your cap table, that may actually deter, VCs from investing. So you have to be extremely careful about, how angel investments or angels want to invest in you. But perhaps you find one great angel that says, I always invest with these 2 or 3. Okay, let's take a look. And perhaps you can go back and negotiate with them and say, hey, but can you actually create a vehicle specific for this investment? Some of them may want to do that. Some may not. But, still, if you keep your cap table as clean as possible, it's good for you in the long term. And if you have any questions, please stop me. Yeah? So, venture capital. I thought not to reinvent the wheel for this, because there are plenty of slides on plenty of pictures of how the VC anatomy or the VC ecosystem works. And it is a very complicated and murky world. So when you're talking about VC, of course, you're looking at, early stage VCs, middle stage, late stage VCs. Some they have micro funds, some have got funds, some they have it is very complicated and complex to understand. But most of them have got an investment thesis that should hopefully tell you if this is an appropriate investor for you or not. And the way it works is very simple. All these VCs, what they're doing is just to provide manpower or to basically select the deal flow. They are not deploying their own money. They are deploying the money of their limited partners, coming from pension funds, funds on funds, insurance, and much more. So every time that we speak to a VC, they need to actually deploy the money of someone else. And they have to go and pitch to these people as well, like you pitch to them. So this is actually, a very important thing that, I learned throughout my journey. And I had to basically make sure that, I spoke to the right people at the right stage of the fund. Because if you're going to go there at the end of the fund normally have got specific timelines. And of course, also pots of money. You have to understand at what stage they're at. Because in this way, you understand if this is the right time or the wrong time to actually go and pitch to them or perhaps go somewhere else. And of course, some of them have got different funds. So that is also a question you may ask. Do you only have a fund? For instance, in our case, I heard Oliver before talking about Cherry. And Cherry Ventures, for instance, right now they just opened a crypto fund. And, but it's not advertised very well. So they're just now they're starting to push it out. But, at the beginning, it wasn't that publicized. So you just basically always ask for, a little bit more information. And then, of course, each fund may cater to different types of startups. They may want to actually invest in early stage. But again, what does early stage mean? Is it pre-seed? Is it pre-revenue? Is it seed? Is it what? Because unfortunately, you think I'm sitting in front of an investor, I'm not asking any questions, they do the questions. No, it's not like that. You have to ask the questions because otherwise they're going to basically already see you as a weak founder. Unfortunately, it's I'm telling you this by experience. So you have to be there, conscious that you've got as much power as they do. And when you put yourself on the same level of communication level, then it's completely different. And then you start having a discussion or a conversation rather than them powering the conversation. And of course, it's also very, very important to tell them what are the next steps, because some of these VCs perhaps are there just to actually look at, competitors, potential competitors of their own deal flow, or their own companies, or they are looking for, perhaps, fish information on, market trends, and much more. So, and then of course, you got the investment. And this is an interesting one, follow-up investment. So ask all the time if they're doing any follow-on investments, because you want an investor who's going to stay with you in the long term. Because perhaps they invest, in the first ticket, and it's the same for angel investors, right? Are you willing to actually do a follow-on round? Are you willing to lead the next round? And that is actually one of the key problems that a lot of entrepreneurs have, me included, is to find a lead investor. Once you have the lead investor, it's going to be so much easier. But you need to find that person in order to actually go and get more investors who can want to jump on the round. And it's very important to actually put them almost against each other, right? And to have a bidding war, that would be actually the best case scenario, because you want to get the most out of your, company. And so we are looking at the funding cycle. We put it all together, right? Okay, so it looks like, very messy, but one thing that I found online whilst I was doing this research for this presentation is that a lot of information out there are outdated. I'll give you an example. They are saying here that pre-seed is friends and family, grants, crowdfunding, interest-free loan. This was probably in 2015, 2016. Right now, pre-seed is all angel funding, venture capital, crowdfunding, equity crowdfunding. So everything has moved up a notch. And actually, the pre-seed and seed round have almost merged in terms of kind of VCs that we're seeing here. So, don't look, when you look at things online, just always take them with a pinch of salt, because a lot of the material that you find is actually outdated. And also with regards to, how much shall I raise? Is that a question there? How many of you are raising at the moment? Can you please raise your hand? All of you, right? No, you're not.
Sorry, what do you mean by raising? Like,
Raising funding, next
yeah.
round.
Yeah.
Yeah, you're opening your next round, right? And and I guess it's going to be a pre-seed round for many of you, right? More or less. So the thing is, like, you know, the terminology is blurring at the moment, and it really depends on the vertical you're in, the stage of growth, your traction. We will see that later anyway. But it really depends on a lot of things, that, you know, the kind of stage you're at and the valuation that you get. Because pre-seed, you know, if we're talking about 10 years ago, probably pre-seed would have been like, you know, I'm raising 100K, right? Right now we're seeing some pre-seed rounds for 2-3 million pounds. So that is like, you know, it's completely, you know, the whole system is actually changing very, very rapidly. So, you know, we need to basically look at, when we look at all of these slides, let's always like look at, you know, don't take everything for granted. And of course, I mean, seed, right now, a lot of the seed is happening with VC money. You know, you wouldn't do like, you know, a lot of, depends on the angel networks. Again, there are some angel networks, business angel networks that love, you know, pre-revenue kind of deals. Others are very adverse towards pre-revenue companies. So again, ask for these things, because otherwise you're going to waste half an hour of your time. Because that's more or less how, you know, how long the calls with investors normally last. And then, of course, I mean, once you've raised all of this, you know, you're going through your early growth, your growth maturity, and then you decide, right? Do I just want to, you know, how do I want to exit? Now, why this is important? Because when you're speaking to an investor, a lot of us, and I'm putting myself as well there, a couple of years ago when I started this whole thing, I thought, I'm going to do this for good. This is just like, you know, what I love doing, and I will do this forever. No, because an investor wants to understand, when am I making my money back? What's your exit plan? And I think that this is actually so important. It's a slide in the pitch deck that is always, you know, overlooked a little bit. So an exit plan is always good to have. So let's take a look at some of the recurrent terms when fundraising. And as I said, you know, I'm very fresh from all of this. So, you know, some of these are basic things for you. But, you know, we can just basically take this as a conversation. So recurrent terms when fundraising. So I like the number 3, so I just put 3. There are many more in there. Pitch decks. A lot of, I've seen, when I mentor startups, I've seen so many, you know, pitch decks long, like 20, 30 pages long. No matter how complicated your product is, whether you are doing a rocket science kind of project, medtech, or you're selling beverages, your pitch deck should always be 10 to 12 pages. Now, you may also want to do different versions of your pitch deck, depending on the type of audience that you're pitching to. So that is like, you know, all the time, snapshot of your company. Most of the slides, if you actually go to DocSend, you will see actually that they've done a very good study and on which slides are the most viewed by investors. And the team and the product slides are the most viewed by investors. To get was team, product, and then there was problem and solution. So they don't give a damn about your numbers. And you know why? Because your numbers, most of the times, and that's, you know, I've seen it based on my research and experience, they are worth nothing, because you're just making financial forecasts based on nothing. Because until you have your first paying customer, you will not know if that is the right price point, if that, you know, you potentially can shift, like, you know, your stock or your product based, you know, on a subscription-based model, enterprise model, you don't know. So yes, good to do some projections, but the investors at the pre-seed, pre-revenue stage don't really look into these things as much as other things. KPIs and metrics, however, you know, what I've said is valid, but you still need to tell them what kind of KPIs and metrics you are going to use in order to evaluate your business, right? Because if I'm going to tell you, like, you know, how much do you value your business? Okay, great, you value at £1 million, but why? So how are you going to measure success? So, and again, that is like, requires a little bit of a deeper exercise depending on your business and revenue model. Some of you may use like, SaaS. Some of you is just like e-commerce, marketplace, one-off sessions, ad-based, enterprise model, partnerships. You really need to understand this. And of course, you may have different types of customers. You may have like B2B customers, B2C customers. And there as well, you need to basically take a look at those and just basically come up with some KPIs and metrics. So normally, by the way, I don't know how many of you have already thought about some metrics, KPIs, metrics, how are you measuring success? Number of customers sold, I don't know.
The main
For you, it's
could
easy.
be sales
Yeah, for you, it's easy.
in some things, but yeah, when you've got other products to launch, then it's a case of finding another metric that's useful for that particular thing. So, if advertising that along with crowdfunding or SBCs, I suppose, sign-ups, and getting that, showing them the research that people do want that product.
And also depends on where you're selling it on, right? Because if you're selling it online versus offline, you may have different metrics. On your website, you may have churn rate, you have repeat customers, you have so many things that you can measure. Offline, totally different story, because you've got supermarkets who are probably buying your product. And so again, you say repeat purchases from, wholesale industry. So, and also another thing that we never think about is the number of, complaints that we receive, feedback that we receive. And that is so important, especially for B2C type of products, for consumer FMCG type of products. What about the medtech?
Number of customers per is it something that we get like the number of licenses?
Licenses, yeah.
And then you renew those licenses over time.
So I guess that your product. Can you tell me more about the revenue model of your product or service? It's a subscription-based model, or is it?
Based on number, it depends on two different segments. Mostly, they're based on the number of patients that a practice has, and that they need to follow up on over a period of a year.
Mm-hmm.
And that's kind of like the unit of the revenue stream. And on the research side it's similar, but more linked to the project, but not the year.
Interesting.
But at the end of the day, it's based on the number of people that you need to be monitoring remotely through the app.
Right, but you need to acquire these customers first, right?
Absolutely.
So the number of customer acquisition, so something that is called CAC, customer acquisition, is definitely one of the key metrics. And then, of course, you may have churn rate, as I said, retention, customer retention, price, per customer, product price per customer. There are so many different types of metrics that you may want to look into. But all of these are very helpful because they will help you with the financial forecasts, which at the end of the day, they should just basically give investors and yourself an idea of future revenues and future costs. And normally the documents that you may want to have together with your pitch deck are a balance sheet, an income statement, and your cash flow statements. But again, not necessarily needed. So you may want to have all the three of them together in a financial forecast with 3 tabs. And there are so many models out there that you can use. At the end of the day, one of the key important things that an investor will ask you is your burn rate. How much cash are you burning? And if they're giving you money, why are you not burning? Because the thing is, they make money if you actually spend their money. So it is so important that you have an idea of your cash burn forecasts. And I heard you before saying we haven't spent the 4K that we got, right? Yet. So for an investor, it's so important to understand, before you go there and pitch, what you're going to use my money for, when you're going to plan to deploy it, how are you going to deploy it. So in case you're going to go and pitch for 1 million pound, 300k, whatever it is, you need to have a pie chart normally, and that's what I recommend you, that on the back of all of these documents, you have a very simple tab with your expenditures, so that you basically have it clear that, 50% will be salaries or, tech or whatever you want, 20% will be, product development, another 15% will be marketing, and then there would be some expenses and so on and so forth. And you need to know exactly how you're going to deploy it and when. And that is why attached to that, you see that there is a lot of steps. In order to do that exercise, you need to understand your product roadmap. So if I don't know what am I producing, what am I selling, how am I going to tweak this product going forward, how do I know, how many people I need, what are the costs associated with developing all of these new features, how am I going to promote it? So in a way, again, this is based on personal experience. It is like, think of the product, your product, think of the customers you've got on hand and the ones that you could reach in the next 12 to 18 months, and start making some forecasts in terms of product roadmap first, features, launching these features, and put some costs associated to the features, because that is it's a much smarter way to, ask for money, because an investor will come to you and say, so you want 1 million, why? Just because, you want to pay yourself a salary? No, because, and then you have everything on hand. No, actually, we need this because we need these features and this requires this technology and so on and so forth. And in your case, it would be stock, definitely, I guess in your case as well. So it's quite an important area. So then we go into the negotiation. And I'm pretty sure that you have gone through some sort of negotiations anyway to get into this accelerator somehow in a later version. But the negotiation is the one that takes the longest. And I'm telling you, if you are, word of warning, if you are thinking of, and that's why it's so important, take a step back. That's why it's so important to have your burn rates, how fast you can go, how far can you go with your 4K, right? Because you need to think about your next fundraise. And if you don't have enough money to go by, then you are in deep trouble, because a fundraising process can actually last as long as 8 months. From the beginning, you actually get in touch with an investor to the signing and receiving the money in the bank account, because let's remember one thing, until we get the money in the bank, it is not a signed deal. We personally signed a letter of intent and we signed a term sheet, but then we turned it down. And that was for us, it's not a done deal. No matter if you actually signed whatever you want, but if the money and the cash is not in your bank, it is not a done deal. So that is why it's so important that you account for all these hiccups, because it can be the investor doesn't want to invest anymore. There are always problems. Be prepared for the worst. Really be prepared for the worst. So in that case, but when you go to basically to an investor, they will ask you, how much money do you want? Great pitch, by the way, guys, great pitch. How much money do you want? And what would be your valuation? So, and your valuation is linked to the equity that you're willing to give away, right? So now, why is this so important? Because you are going to be diluted at some point. Even if you are your majority shareholders at the moment, and perhaps you are just 80%, you own 80% of your company. But remember that this is going to last very, very short period of time, because probably by the third round, you're going to be a minority shareholder. So, it depends on how fast you want to go, of course. But in tech, we're in blockchain, we know exactly that is going to be the case, especially if you've got co-founders, right? So that is why it's so important to actually think about all of these elements. And the valuation, again, you guys are all pre-revenue, I guess, right? Are you pre-revenue? No, you are post-revenue. Kind of. Post, pre, post, in between, very early revenue, right? So at these stages, which we call early stages, investors normally look into team, trends, technology, and traction. And this is something that I have actually put in there. It's like I called it the 4 T's, as it's a model that I ingrained in the team. So these are the kind of 4 things that an investor look at, and that back to the, what we said about, the presentation, the pitch deck, which slides they look into, right? So they look into these things. If they know that there is a trend in medtech, specific things with, I don't know, mycology, or specific thing about, your product. So they will know exactly that, there is an opportunity, big opportunity there, and they have to hurry. So the bigger the trend, the most competition you will find from an investor side to you. So, and then technology, of course, is extremely important. Have you patented your technology? How is, is it open source? Tell me more about your technology. And of course, traction, because traction means so many things, especially for early, pre-revenue businesses or early stage, of revenue. Traction can actually be also potential contracts for POCs, right, that you have with partners. Or it could be a number of partners that are testing your product, because these partners could potentially convert into a customer tomorrow. And of course, you got your letter of intent, which is your first, stage towards, negotiation process. And these are normally non-binding promise of investment. I'm just stressing the non-binding, because a lot of, entrepreneurs, when I speak to them, they're like, oh, we got a letter of intent, we're just going to get an investment. No. That's not, could be the case. We really hope that that is going to be the case, but that potentially could be, the beginning of nothing. And finally, we're going to go into the closing. And these are, again, 3 of the many terms, right, that we are talking about. But these are the most recurrent terms that at least, we experienced as well. So shareholder agreement. This is like, I call it a rule book for founders and co-founders. How many of you have got co-founders? You got co-founders, do you have a shareholder agreement? Fantastic. And why is that important?
It says the rules very clearly.
Yeah, but not only for yourself, also for incoming investors. So that is actually one of the first things that investors look into. Do you have a shareholder agreement? And most of the times we just tend to say, okay, now we'll do it later. But even if you don't have a co-founder, by the way, it's very important for you to actually have that in place, because it sets the rules. This is my house, these are my rules. Advisors, shares, ESOP, employee stock option plans. So these are also quite important things to consider, because a lot of investors don't want to be diluted. They expect you to actually take the ESOP and then they're going to invest. So these are some important considerations that you have to think about. And of course, you don't need to set, an ESOP of 8, 10 or 12% from the outset. You can actually just basically say, okay, how many employees am I planning to hire in the first 2 years, first couple of years, or at least until the next round, 1 or 2. So just be cautious about it, because you don't want to dilute yourself too much. And of course, then you've got your term sheets. Finally, you got your term sheets. So you may receive a SAFE, so a simple agreement for future equity, or you may receive a convertible note. At the end of the day, one is debt, one is equity, the other one is debt. But both of them should list the conditions of investment, the valuation, and how all this will convert into equity, at some point. So with this is a bit about us. So this is our team. You met me today. Russell is our executive director based in Saudi. Sebastiano is our CTO blockchain lead. Muskan, some of you might have met her, and Harry as well. And then we got our advisors. We are quite heavy on the legal side because, of course, we come from, from experience. We know that with blockchain and crypto, we need to be quite strong on that side. And these are some of the achievements. So I thought, I'm coming here to talk about fundraising, what has been our journey, right? Now, especially for the women in the room who are trying to fundraise, that is even more complicated and complex than men. It's a fact. It's not like, something, it's a complete fact. But that doesn't mean that you don't have possibilities. There are a lot of grants out there that can actually help you and support you. I'm not talking about government grants as such, because they're extremely competitive. You need to, unless you got a very good partner, and universities can really help you, by the way. So to get some, if you can partner with the university for one of these grants, innovation grants, that's great. But going vertical again, right? For us, we work in the blockchain industry, and we know that there are a lot of blockchain protocols out there that offer grants. So we went to them very early on, got Block 1, we got Polygon, which is like, layer 2 of Ethereum. And we just basically said, okay, let's go there. But then there are other programs, like, the ones you're in, but there are Cyber Foundry, which is now closed, and the AI Foundry. For some of you who are actually thinking of building some sort of AI components in their products. So these are definitely, UOM is part of these AI foundries, UOM, MMU, Lancaster University, and the Salford Uni. So it's extremely good, because, they're offering you, like, competencies, POC, they give you something that you can potentially test with your providers, and they can be an extension of your team. Plus, they give you credibility in front of investors, because actually all of this really helped us to get the investment from Animoca Brands and Launchpad Luna. So it is like, pretty much like a mix. So there are different ways to actually, you can, raise funding. These are some of them. So thank you so much. I hope I'm on time. Actually, I am 36 minutes. I've got, like, any questions? Let's see. Yeah.
With, with grants, do you know any which focus more on like education or MMU students?
What exactly do you mean with education? Education, like, because again, we can think about, like, tech building and a tech product. Is that what you mean, or is it like?
So it's mycology education, so it's teaching people about the reaches of mycology and how it can be implemented in the future. So Innovate UK is definitely your first point of call.
I've seen in there something about EdTech. EdTech is extremely big, and by the way, you should also check out Twinkle Hive. Twinkle Hive is actually based in Sheffield. I can make an introduction. So they are basically, they specialize in EdTech, because Twinkle is an EdTech platform, and they're always looking for new companies to invest in, especially in the north of England. So be happy to actually, they are more an investment, equity, but, still, it could be something. And perhaps, then again, you can almost think about, like, creating a consortium. Now, what I've noticed with grants is that the most successful grants are those ones who create a consortium. So if you can pull in together an academic player and a potential customer, then your chances of actually getting a grant is much higher than someone who's just going to go there and I'm a startup and that's it, when we're talking about government grants. If you're thinking about, like, EdTech, then I would probably go and check, like, some of, the biggest leading, EdTech companies and see if they have any grants. And, that's how I found, like, the Block 1, grant at the beginning. And that was like 2018 when we got that grant, and, they were just starting up then.
Yeah, great.
But also think about technology that you're using. Because if you're using any AI, any machine learning, perhaps, there are grants in that space.
Cool, thank you.
Yeah.
Yeah, I want to know, when you're presenting a pitch deck to an investor, is it good to actually have the exit opportunity? Like, because I was imagining the same as it happens with the financials. Like, how can you actually know so early what's going to be like your exit opportunity?
Well, you need to know how you want to, exit your company, more or less. If you need to have a discussion amongst all of you and say, hey guys, are we in for, like, 3 years, 5, 10, or what do we think is, like, who do we think could be, like, the potential buyer of this company? Buyout. Can we be, like, acquired by someone, or do we want to actually, float on the stock market? What is, like, our, perhaps we don't have the competencies. If you don't have the competencies, then, perhaps you need another CEO down the line who's got the competencies to take you, public. Now, normally, of course, this is not something you have to think so much, in advance, not all the details. but at least to have an idea of how, hey, this is a great opportunity. We know the market is, the trend is amazing, it's great. We see lots of interest from a lot of the incumbents to actually, in this space. So potentially there could be Microsoft or, whatever, that could. So, and why? Because, they've probably done a lot of acquisitions in that sector, they're doing it right now. So this is basically giving an idea to your investor that one, you're prepared, you know your market, and potentially you could be like, you could take that company a bit further to a point that can be acquired. If that is your route, of course, yeah? I hope that answered the question. Yeah.
Innovate UK, do you have any food and drink related grants at the moment?
Oh, at the moment, I thought I saw something about food and drink, but it was more about sustainability. Do you think you can actually tweak it around that?
Yeah, certainly.
Yeah.
It's in the pipeline, the atmosphere.
Yeah.
So, yeah.
Because, there is a lot of sustainable packaging, sustainable... Yeah, there was a lot about reduction of CO2 and all of that. So perhaps...
Trying to build a lot of that in from the start anyway.
Yeah.
I want to do that. And some companies now are moving towards B Corp as well.
Exactly. Actually, I'm saying we are also fresh of the acceleration program ourselves with the Brink and Animoca brands, and there was a specialist, someone specialized in B Corp registration. He took us through the whole process. It's very long, and to be honest with you, when I saw the list of B Corps, there was Brewdog in there. Now. Is that really a B Corp? Okay, you're definitely trying to save the planet, but then let's say that your press is not very positive at the moment. How you're treating your employees, how you're doing that. So, and B Corp could always relook at the application and potentially, kick them out because there were a lot of complaints about that. So I would think about, if you're thinking on going down the B Corp route, it's definitely great. But it's long. It takes a lot of, number crunching, application writing, but it could potentially be a differentiation point. Although I must say that I've seen also a former client of mine, with a small e-commerce brand, is a clothing, like sustainable clothing. They didn't have a huge impact in sales on the back of B Corp. It's more about in a way, you can use it as a PR play, as a certification, how, the question that I always ask myself is, yes, it is important for an investment, but how is that important for your customers?
Yeah, depends who your customers are, because some customers want that, and you can really increase
right.
Sales. So, depends on them.
It depends on them, yes, absolutely. Of course, it's always good to have, to be a B Corp, but, it's just you have to weigh, efforts and... Because that is going to take, because if it's going to take you 3 months to be B Corp certified, that is going to detract attention from your day-to-day business.
So
is that worth it?
What food, drink, ones are relevant at the times. I have seen in the past, there's one relevant to what I want to do, but they're doing that for so long. It was I know that's a lot of work to get them done as well.
Yeah.
It's more than putting together business plans.
Yeah, absolutely. Anything else? Yeah.
Yeah. So you're blockchain company, have you seen any successful ICOs in the last few?
Why are you asking me this question? Tell me.
I'm just basically where in the middle of fundraising, and we've been having some meetings. We are kind of still weighing our options and stuff, and we feel what we're making. I feel an ICO we're still discussing it basically, but we feel an ICO will really bring the people into the ecosystem of what we're trying to build. Obviously, we've seen the old scamming and all the other stuff. But what I read is that if you have a solid product behind it, then it's not.
So, are you thinking about the blockchain element of the product? Do you have a blockchain side of it?
Yeah.
Right. Okay. So, are you thinking about having a token as well associated with that?
Yeah.
Right.
Or it's based on NFTs and displays.
Okay.
NFT displays.
So I'm coming out of around 10 conversations last week with various blockchain VCs. One of the key things that is trending at the moment is tokenize as late as possible. Don't do it now. So don't have a token, don't launch a token, yet another token for no utility whatsoever. The first thing that in VC, blockchain VCs look into, apart from all the stuff that we've seen, actually they don't even care about the numbers. They care about your community. Okay, so how big is your community? It is that superficial. I'm recorded, and I'm happy to actually say this on camera, because it is actually something that, it is like that. I've said this many times. This is the biggest problem of the industry right now, is educating the investors in this space about what is quality and how do we create utility for all of us. If your product really creates a utility, then I would probably not do an ICO right now. I would probably look into launch pads. I would look into custom accelerator programs. I would look at, reaching out to VCs if you have a strong community. But if you don't have a strong community and you're still very much early stages, don't launch an ICO, because it's going to cost you more in legal costs than, anything else. So that is my personal recommendation. But then, of course, everyone's, is different. But the legal side is quite important. Done?
Thank you so much.
Thank you, guys. Thank you.